Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Monday edition of Trader Talk in today's market, and I am your host, Kevin Horner. I am joining you from a beautiful and sunny Victory, Denver, Colorado. I am pleased to be joined today by my friend, Mr. Ray Kimbrell. Ray, how you doing, buddy? It's been a while since I've seen you. Great to have you back on the show, man.
Oh man, it's great to be here. And since you opened it up that way, I have to say I'm here in the sunny Dallas area, and no victory yet, but tonight you never know.
That's right. That's right. You guys got a chance to fix that up tonight. No problems at all. I'm still riding that orange wave of a incredible Denver Bronco victory. I'm about as pleased as punch on a Monday morning heading into a bye week. So go Broncos indeed. Now, hey, on this Monday, I've been out for a little bit, and the market has inevitably changed quite a bit, Ray. So we actually have had some volatility. We've had some downs with our former ups. So we're absolutely going to look at some changes in the market here. It's been a little different, hasn't it?
Yeah, it's been a little bit up and down, the volatile. If you don't like those kind of moves, you're probably a little bit nervous. But hey, I think it's gonna find its way. Maybe you'll get that Christmas bounce coming. You never know.
You never know, but this is why we do the show, obviously, is to kind of prepare for potential moves in the marketplace. And I know some of the times it doesn't feel like any of that is warranted when we seem to be grinding, but inevitably we get some changes. So it's kind of interesting to see that coming into play finally. So we're going to talk about some of those levels, everybody. Don't forget to say hey to Ben Watson here in the chat. He's going to keep an eye on all of you, make certain you're all getting your conversational topics into the discussion here. We're happy to bring those in. So please use that Q&A chat to the right of your presentation window. Remember to follow us on X. You can do that for me, Kevin Horner, CS. You can do that for Ben Watson, CS as well. And let's get to those disclosures, everybody. Please remember that our conversation here is informational and educational only. We do not make recommendations. We do not make endorsements for a specific approach to trading here. We will talk technical analysis, of course. We do that by offering up insights and concepts that traders might choose to employ from the technical analysis viewpoint. But remember that we do not encourage you to base decisions exclusively off technical analysis. And further, it could be said that we don't encourage you to make your decisions off any one single piece of data. It can make a lot more sense to be a bit more diligent in your review. Make sure that you're utilizing multiple areas of information when making your decisions. As far as an agenda is concerned here, everyone, we will go through our same process, top-down methodology. We'll hit up the major indices, look at sectors on the move, and also discuss stocks in the news today. As I said, plenty to get to, and I don't know about how you feel about this, Ray, but inevitably for me, when I take time away from the market tends to move. Most consistently for my short-term memory, it seems like that when I step away, the market does its drawdowns, its pullbacks, and that's kind of what we saw over the last couple of weeks here, Ray, is a pullback to the 50-day moving average.
Hey, do me a favor. Next time you're going to step away, give me a heads up notice, all right?
I'll do that for you. You got it. So, Ray, can we just fall back on what we've been doing for the better part of the last 6-7 months here, looking at that 50-day moving average and looking at that as support?
Yeah, I was right on it. Matter of fact, I have the same chart up on my end on the other screen here, and I'm noticing that same support level in that 50, that purple line you have on your chart for those who are looking at it. And that 50-day moving average acting as a great level of support. And you can see that as what Kevin, that exactly what you're talking about, that up and down, that over the last couple of weeks, the market has some nice peaks, came down, tested, bounced back up, came down, tested again. And and you got your divergence drawn in the RSI below it. And it's kind of showing that. So, are we going to continue on that same line? Is it to come back down? Is it going to continue to hold that 50-day moving average? Time will tell. But
yeah, it's a little bit up in the air right here, right? We're at an inflection point, if you're a trend trader, you might suggest, because the belief here is that we're either going to get a bounce or maybe we pull back even deeper. I think for a lot of traders, though, Ray, it might be as simple as watching the low that we just made on Friday, perhaps the low we made the prior Friday or so. What do you think about that ledge there at around 66.30 or so?
Yeah, I'm I'm not a perma bear like some folks are, and I'm liking the continuation of the upward trend on it.
Okay.
I like the bounce. I like to see how it's consolidated right at that support level, and seeing it today. So I mean, yeah, little down action this morning as we're looking at that, but it's bounced back up from its open a little bit, even
Yeah.
though it's down.
Well, I'll tell you what, one thing we know is we don't have to make decisions first 5 minutes of the trading session. That's
No,
for sure. A
no,
lot of traders want to be a little
no.
bit more, you want to be a little more disciplined, right? Let some time pass. Let's consider two things though. If in fact we are at support, then what we should see is a bounce. A day like today, given the range we had on Friday, we actually have a pretty decent shot, I would think, Ray, of keeping
Yeah,
all of today's action encompassed within Fridays, meaning an inside day, which can indicate that bit of a pause to the market here. And that's kind of what we could see at support. So two things. One, traders trying not to exit at areas of support, because exiting at support can lead you to leaving returns on the table. If we are in fact at support, then we could be witnessing a bounce coming into play. But if you're waiting for breakdowns, perhaps that low that we created last week, or on the 7th of November there, trading under that very nice lengthy tail would close under that would be a significant short-term development, and probably push a few more long holds out of the SPX would be my thought, Ray.
yeah,
And then of course you called out that RSI. We've got that declining RSI, but it's been in a bearish divergence for a while. And
yeah.
all we are right now is what, 3% off the peak. So I'm trying not to overdo it. And Ray, it could be said that the RSI is played out now in a
Yeah.
way that we might have expected, given the way that prices have acted.
Yeah, and also on Friday's move, I use trending candles. You have the solid ones here, but Friday move, although it was a down day on Friday overall, it finished up. I mean,
Mhm.
if you look at the travel of the day on Friday, you had that momentum going into a weekend even. So that's kind of some momentum to look at, and then we'll see how this morning is going to go as
Yeah.
it's rolling positive as we speak.
Yeah, okay, and one final note, Ray, as I move on to the NDX, one of the you just nailed it, I thought, was the feeling, the process of the way the market moves. Weak opens that are followed by bounces or strong closes, that's a price action activity we can get behind. It's
Yeah.
the inverse of that we don't want to see. We don't want to start hot and then fade.
Yeah, the building that positive momentum for those that are bullish. Yes, you want to ride that. That's the wave you want to be on, no doubt.
That's as much as we can. Now, Ray, I'm keeping up that 50-day moving average here as we look at the NASDAQ 100. As you can see, equally as consistent, goes back to that May 1 period. We've had bouts at the 50-day, but boy, have they been few and far between.
Yeah.
And that's precisely what we're looking at right here, Ray. And taking a look at, as I zoom in a little bit, we're already pushing off of the 50-day this morning, trying to get into the upper levels we created last week with Friday's high. I think that represents an area of very important intrigue for a lot of bulls in the short term, Ray. We can get
Yeah.
through this white line. I'm going to snap at about 25,200. That would be a wonderful development for bulls interested in continuation of the uptrend.
Man, you got that hammer about it last week. It looks like a Monday of last week. It came in right there. Yep.
Yeah.
And you got the same thing breaking the highs Friday right now already. But yeah, that's an interesting line you drew right there at the coming across as that potential resistance. It breaks through that. Maybe you'll see that retreat or move it back up to those higher peaks.
Mm-hmm. But of course, this is going to be whether this happens today or maybe we get up into that white line at 25,200 and we get rejected there. All of that is important, but maybe not as important as what we've got later this week when we hear from NVIDIA in the afternoon on Wednesday.
Yeah, I was about to bring up. We'll see what happens on Wednesday, because that one company affects a lot of these indices, no doubt.
Yes, it does. Large cap because it's part of the NDX, part of the SPX, and then everything they do is very much tied to what happens in small caps as well. So
Without,
gives us plenty of topics to make sure we're monitoring and watching, at least for the rest of this week. So with this in mind, here we are about 120 off from that level, everybody. Again, 25,200. If we zoom in briefly, just to get an idea as to how we're acting on the intra period, we are bouncing right at our pivot point. Our pivot point is encompassing or incorporating rather Friday's price action, taking the open, high, low, and close, giving you an average equilibrium price. The fact that we're bouncing from that level is potentially positive, at least off the open. We'll see how that goes. But you can see the level above. If we could manage to get through that, I think you might see a little bit of enthusiasm on the short-term side of things, Ray.
no doubt. I think you nailed it. Yeah.
All right. Well, then let's see how the one index that has struggled most of late is acting, that being small caps. And the reason here, everyone, you can see a pretty distinct difference. Small caps well below the 50-day moving average. Yes, a low open on Friday that was finished better than we had previously seen, but Ray, we are well below the 50-day. In fact, at the open this morning, about 2% below the 50-day moving average, 2.5%. We're getting into a sticky window here, given the time frame below the 50-day. What are your thoughts as you're watching the trend here?
Yeah, I'm looking at the same thing. I actually use a 1040 200 that's permanent on my screen up here, and everything's rolling down except the 200 is kind of sideways, but a little more concerning there in the Russell. You see that a little more defining here than on the other two indices that we just showed. And yeah, I mean, even the price action this morning, it's not trending with the other two indices, actually the three major indices. It's still negative. But those are all printed positive, so it's struggling a bit.
Yeah, and I think, Ray, what I noted when I was doing a little bit of pre-show work was this is almost exclusively tied to rates, right? We've seen a couple of things change here of late. So we're significantly now day 3 in a row below the 50-day. So for some of you in the trend trading viewpoint, time spent below your trending supporting moving average can dictate reasons to be reducing position size or building cash. I'm sure, Ray, there's some short-term traders out there in the small caps that are probably feeling similarly. If we're looking for some of the story behind it, I think we look at the 10-year and we notice that the 10-year is in process of maybe carving out a short-term bottom on these yields, Ray. Notice my downtrend line. Notice the 20-day moving average in orange. That's a pretty good curl you've had here, and it's about to cross the 50 to the upside. It's making higher highs in the short term along with higher lows.
Yeah, and I think you're right on the money there, watching this and how it relates to the smaller caps and see what's going on. It's definitely showing some little more signs of bullish action there. I like how it's curling back up above. You said you have a 20, right? Yeah, 20, 50.
Yeah, the 20 and the 50, correct.
Yeah, so it's basically created a crossover right there. I mean, they're both rolling up. So that's a those trend traders who likes to use technical analysis should like that. If you're if
you want to see yields climbing, sure. That's not ideal as it relates to our Russell 2000, unfortunately, because the insight here, I mean, if we just looked, 1022 was with the bottom in yield right here, right? So we had yields down at 395. Go back to the rut and 1022, let me see, 1022 right about here. Okay, so we had been in a pullback, we bounced back, made a double top, and then rolled over. So yeah, this is there's some clear changes happening in terms of actual 10-year yields rising. So we got to pay attention to that. But Ray, there's another development underlying the surface here, and that is that traders are positioning differently than they had been. I'm bringing up the third-party CME Group's webpage here to look at the Fed expectation. So this is the CME Fed tool. I'll remind you, this is, again, third-party. And this is not a way to look at it in terms of guarantees of what the Fed's next decision is going to be. But Ray, it is how traders are now positioning themselves. What are they doing with their dollars in expectation of the Fed's next move? Well, December 10 is when we're going to hear from the Fed again. And now we are sitting at this 375 to 400 basis points. We do have a 57% likelihood of sticking there. Ray, if we go back, though, a month ago to October 17, the likelihood was 93% that we were going to get a cut. And today, that likelihood has dropped to 43%. So we have seen a 50 basis point move in the expectation for a cut, yet another reason, another headwind that small caps are going to have to deal with, Ray.
Yeah, and I know that's one of the things that a lot of people are watching is what is the Fed going to do on the 10th? Looks like they're going to be holding off. I'm sure there'll be a lot of pressure going along. You'll start seeing that in the news, break it back out, watching to see what are they going to do? What's the president going to do? Start talking about the same thing. You know how he likes discussing the cut and always wanting the cut. But we'll see. And the pressure may get there. As it is right now, it looks as if no, though.
Yeah, well, at least that's how traders are throwing their dollars, right?
Yeah.
Of course, we have concerns around the data, or lack thereof. Are we going to, get some data that is old and helps us out a little bit, tells us something at least? It's better than having no data, I would think, but remains to be seen how that's going to play out. So it is something that we have to keep an eye on. And again, as traders, it is important to set our technical levels where we can take action, but it's equally important to understand the mechanisms that can lead to those moves, right? So paying attention to headline risk and knowing what's coming in the way of reports and news and data can be very, very helpful to kind of build your own thesis about what the market's doing and what might be the next move for the market, Ray.
Matter of fact, some good Bill Regal in the chat said, bad jobs report can trigger that. So yeah, just as you're saying, look at those different reports that come out, and you can see, it could sway it.
Mm-hmm. Absolutely.
Yeah.
Okay, so here we are back to the Russell. Let's move off to the semis, which of course have been our leadership group for a lot of this move. Ray, we've got a good spot for a bounce here. A lot of similarities in these charts, and traders tend to take a little confidence from the similarities from one area to another. There's only really one skunk so far in the picnic, and that's the Russell at this point. But the leadership from the semis has been quite notable. The one thing that stands out on this chart to me, though, is that declining RSI. Even though we are bouncing here at the 50-day, it's almost like this is a crux location for a decision on the semis, isn't it?
Yeah, and I'm liking the bounce off the moving average, as you just pointed out, and I like what you drew that resistance line right there again. And you can see that same and that same hammer that formed up last week, the bounce that's occurring right now, and the break of the high from Friday. So, yeah, that's going to be a tail sign. I mean, it's almost broke the high, not as opposed to the close. So yeah, I think it's a good level you pointed out and you drew in there. It's right on the money.
You know what? If nothing else, Ray, I hope traders are taking away just some shorter term areas, concepts that they can apply on their own when analyzing these trends, right? If Friday, for example, is the low of our pullback, and there's nothing about this pullback that is egregious, right? If I went from the absolute peak to the absolute bottom we hit last Friday, it was off 11%. That doesn't feel good. 11% is a bit more significant than what we've seen, but I've recognized that's a pretty standard pullback in a very large group. So when I look at it, if this is the low of our pullback and we can trade above the high on the day we made our low, well, we call that a potential hold move, that can be the beginning spot for the retracement or for the reinitiation or the continuation of this trend.
Yeah, because you'll have a couple of things going on. You're breaking resistance. You have the hold. You have all those things in your favor technically. So yeah, that is definitely something to look at. Matter of fact, if you draw in another support level that the 6,600 range, right there. Yep.
Okay.
Notice that a lot of folks look at the same thing. So you have a couple of things happening. Out. You got not only got diagonal support with the moving average, you also have a horizontal support with that date range or that price range right there. A lot of things going on. So a lot of strength, so to speak, forming up right there.
Ray, good call out, because one of the things that we noted here is even though that happens to be, right at the 50-day moving average, a lot of price action at that 6,600 level in the SOX previously. So it's been supportive. Traders should not have been surprised to see that act as support. Now, the question becomes, is it a decision-making spot, right? Meaning, what happens if we get rejected at the white line here today? If this ends up being our high of the day, maybe the odds for a deeper pullback increase, but they really don't step up the increasing of those odds until we trade under the green line with any conviction. Would you agree with that?
Totally agree. And that's something you got. And again, that's, unfortunately, that crystal ball that I have still is still foggy. So hopefully,
right?
Yeah. So if it's sitting right here. It's looking good though. So
everybody should have a crystal ball, Ray.
Yeah, exactly. I think that call you made, Kevin, if it breaks that resistance right there, you drew with the white line, creating that hold. I mean, a lot of things right there, a lot of trigger points to watch.
Yeah, I think this is an important group. Many of you who watch this show frequently, you've heard me say that the semis being leadership is very important for us. It can be quite instructive for the broader trend of the market as well. So some combination of looking at the semis and S&P 500 or even NASDAQ 100 just to evaluate your broader trend and understand the components, the makeup of those indices can be very helpful. In fact, if you aren't already doing so, definitely want to follow me on X. One of the things that I've done in the last couple of months is a mini series just briefly discussing the makeups and components of these major three indices, the NASDAQ 100, the Russell 2000, the S&P 500, so that you can understand the discrepancies between them. I mean, we say all the time the NASDAQ 100 tech heavy. But to what extent does that mean? And does that mean that there's nothing else in there? Of course not. But the point is you need to understand the balances of these indices so that you can understand why we're getting leadership one day versus another or in certain windows of time. It can be very, very helpful to have a good grasp of those components as they break out a little bit.
And NDX is doing just that for you this morning as we're talking, man. It's the one it's on fire right now.
Yeah, so we got the SOX moving up 1%. You've got the NASDAQ moving up 0.5%, both well off the initial opening lows and challenging highs from Friday. Perhaps an inflection point for a little bit more enthusiasm. The question will come as to whether it's going to maintain. It's a good start to the day, but only 20, 25 minutes in, so we're not going to get ahead of ourselves, especially knowing that this week is the most important thing this week in all likelihood is what NVIDIA has to say, right? I mean, it's going to be very big deal, so we have to pay attention there. Now, one of the things that I did note over the last week was there's been a kick up in volatility. Volatility trading above the 200-day moving average, right? We're 3 days above it, but the spikes have been wide. Okay, so the volatility is picking up. Now, Ray, one of the things that volatility can be very helpful for is for the traders who are maybe wanting to incorporate potentially options into their process. Now, we don't always talk options in this class, and we should note that options, of course, are not approved for, or not necessarily appropriate, for all traders. You need to be quite familiar with your process, make sure you're approved and familiar with all those details, everyone. But Ray, if the VIX is elevated like this, does this present perhaps an opportunity for traders who aren't yet ready to exit long positions to maybe incorporate options as a protective means for their trades?
Yeah, so if you want to protect, so as those who are learning options or understanding it, the VIX will typically, as the VIX rises, increases the value of your option, right? Which is what you're looking for. And so, and with last week, as you were out and you were saying this morning in the beginning of the show, that volatility, there it is.
Yeah.
It's between the is the government going to open back up? All the things that went on last week and all the oh my gosh, right? And so yeah, it's a good thing to watch. If you're an options trader, if you don't have the VIX on your watch list, watching what's going on, you're mistaken. That's one of the things you really need to look and see what's going on, what's happening, and use that in your matter of fact. Kevin, when we teach that, I teach that section with Ben when we do our live classes on options.
Yeah.
Is the volatility is that one Greek as several others as well. But yeah, big thing to watch. You can see pulling back a little bit this morning as people get a little more confident in what's going on from the weekend.
Mhm.
But yeah, it is elevated a bit. Something to watch. Especially as we get into the middle of the week on the earnings coming up, you might see some more fluctuation in that.
Certainly a good chance that we're going to see some increased volatility. Back trading, if we could seemingly push the VIX back below 20, I think you'd see that benefit the broader market, the broader indices. That would tell us, and I know the question inevitably is, what does that tell us? The idea would be there, everyone, that if we see the VIX lower, that those traders, those institutional traders incorporating VIX put options, which is what, or excuse me, SPX put options, which is what is measure of the VIX, would tell us that they are a bit more comfortable. So by lifting SPX put options, if we lift those from the market, then you would tell us that traders are more comfortable being long. So this is not a surprise that we've seen this elevation, because we've seen a little bit of back and forth. We've got plenty of reasoning for being a little bit more maybe defensive in our approach as we've pulled back to areas of support in the broader indices. But it certainly is something that can kind of keep traders maybe on the right side of their own positions, or give them reasons to incorporate alternate strategies with their process as well. So an elevated VIX might be the kind of scenario where traders want to sell options, Ray. Those elevated VIX scenarios kind of lead traders to try and take advantage of situations that commonly don't last, right? An elevated VIX is one of those things that doesn't frequently stick for longer than a few days to a few weeks. So
yeah, sell that elevated.
That's a common approach.
Sell that elevated price, get that premium.
Yep.
Close it back when you get that volatility drop.
That's
no doubt.
That's kind of the idea. But you know what you called out was the reminder of what you do with Ben so frequently, our live events. You guys have got one. Our next one, I think we've got we actually have a market drive going out to Anaheim. That's coming up the week. That's coming right next weekend, right? This weekend, right coming ahead of Thanksgiving. 22nd. So we got that coming up.
22nd. Yeah.
22nd, right. And then you guys are going to be in Houston as well on December 11 for the technical analysis and option strategies. So great opportunities. We try to talk about this all the time, Ray, but I know how much you love hosting those things. You've only been doing it for a little bit. You've only got a few thousand of those events under your belt, right?
Yeah, 20-something years worth. I don't know. Something,
just a small window of time. All right. Okay, so let's take a look at some sectors that are moving today. The big mover this morning, Ray, look at this. We've got a 3% pop in communications. Did not necessarily expect to see that, but what a significant development, huh? Big gap move.
Yeah, didn't see that coming at all. So that's something to look for. Watch the companies within there. It's it's a pretty big jump.
Yeah. I was just pulling up one of the main components there. I think Alphabet resides in this space. And it's got a nice 6% pop this morning. So it certainly could be leading to some of that upside momentum. But the thing that stood out to more than anything else, maybe, Ray, was the quick move. So 2 days below the 50-day and then a gap back right through it. Could be the continuation of the uptrend here. I also noted that the RSI is making a bounce at a good level here, right around that 47, an equal area of previous support in the RSI. So all of that kind of looks significant for a group that is important, but has very tight leadership. There's like 3 companies in this space that are driving it.
Yeah. So, excuse me. I don't know if you have I want to add things to you. And unfortunately, if you have the heat map, you can watch that really
Ah,
good.
I do.
And you
Let's
can see
see.
that. So those who don't know, when you go to the Market Watch tab, and then you could put those, there you go. And so you can see what can drive in a quick, easy look when you put your indices in there. I don't know if a lot of people use the Market Watch tab and use that visualize, but it's a good way to really kind of hone in on if you're looking those want to look at those companies that are really driving things. The brighter the
Hmm.
green, the bigger the move. The brighter the red, the bigger the move to the other side. But you can click on those, and you can click on the boxes, and it brings you around really quickly. And I think a lot of people don't realize the wonderful tool they have with that, and you can see what's going on as there you go, and you can see
That's
the
a
numbers right there.
Yeah, it tells you everything you need to know, right? Well, obviously, market cap pretty substantial. You can see the size of this
Yeah,
position. Alphabet. It's A and was it A and B shares? A and C shares, excuse me.
yeah,
And of course, one of these has voting rights. I believe that's the L version that
L.
has voting rights, and then
Yeah.
the C
I think you're
version
right.
doesn't. Right.
I
So
think you're right.
some minor discrepancies between these, but essentially they're offering you the same thing minus that voting shares. So significant in terms of how this index will grow or this group of securities moves. So the fact that the group is bouncing here, is it led by one stock today? Yes.
Yeah.
Very bright green relative to the rest of what we've seen here. Excuse me, Meta up about 1/3%. And some of these, your providers are also up a little bit here today, so that stands out. But
Yeah.
I love the call out. Obviously, the heat map, a great way to kind of drill in. And for some of us, that's actually one of my favorite things about this platform is some of us like to see this stuff drill down in just data. Show me the number. That's
Yeah.
all I want. I want to see that in a quote field, and that can be helpful. Others want to see it visually. I like the visualize. I think the heat map does a nice job for us of defining it all. And I think we often forget that we can continually open up these individual groupings so that you can see where the opportunity is coming from. Yes, the S&P is doesn't have a whole lot of green there today, but where it does have green, it's tied to the couple of big ones, right? Alphabet, Tesla, Micron, and Broadcom today, all of which are moving kind of nicely.
It'd be interesting to watch that in a video, red one coming up on Wednesday.
Yes, it will. Off 1% on the Monday ahead of earnings. So that's kind of notable. We're also getting, we're getting a bit of a defensive move. When I look at the sector action today, Ray, that's what stands out to me. Positive in healthcare, positive in utilities, positive in real estate. Those three groups are defensive by nature. Commonly, we get leadership from tech, from communications, etc. But now we're seeing those areas breathe a little bit, and you're getting some of this rotation, Ray. So we talked about yields, two very much tied to yield groups, utilities and real estate, potential areas for traders to maybe consider.
Yeah. And especially the real estate side and the rates and what's going on. Did you say energy? Is that what you said the other one was?
Well,
utilities, you said.
Utilities. Yes, we've got utilities up here bouncing off the 50-day. That seems kind of like a notable spot, doesn't it?
Yeah. And depending on what's going on. Yeah. And again, rates affect all of that tremendously. I mean, it affects across the whole spectrum, of course, of everything. But when you start looking at the utilities, looking at real estate, ties are easier to see, maybe if that's a way to look at it. I don't know if, just because it's maybe responds quicker to some of those things.
Mm-hmm. Well, if nothing, I think what stands out to me is just the structure of this chart. It is, we peaked in utilities here on the 16th. We saw that the yields dropped or peaked, had their bottom on the 22nd, right? We saw that a little earlier. This pullback coinciding with the rally in yields. So which makes sense, right? If yields are going to rally, utilities are going to face some headwinds in doing so. Traders lean towards utilities when yields are falling commonly because utilities offer an increased yield opportunity, right? And they're willing to take on a little bit more risk.
Yeah, probably a little, I don't want to say word safer, but a little more secure maybe in their approach. Yeah, no doubt.
Well, there's always a reason for it. And I know a lot of viewers want to understand maybe the why would a trader, not the should I do this, but why would a trader do this? And I think that's what we're looking at here. And of course, we can think the same way when we think about REITs, because here again, this is a group that's, first of all, has gone nowhere, right? I mean, this is about look, what are you going to say about a sideways chart as you got right here? This is about as sideways as you can find, right?
Yeah. Can you say iron condor?
I mean, just going nowhere. See, interesting. Okay, so you're talking about a reminder once more that options can be incorporated to any trading process. There's always a strategy in the use of options that can benefit, whether it's an uptrend, a downtrend, or it's not a trend. This is sideways. This isn't going anywhere. But when you said that, I think ultimately what you're saying is, hey, be aware there's an opportunity. If this is something you want to learn about, it's a prime example as to why you might come out to a class, right?
Oh yeah. I mean, if you know, the hope that viewers know this, most of them, they've come to see us talk about anything. You should have at least 2 strategies per direction. I mean, my goodness, you can't just sit there and wish the market up forever and stay bullish. And you know, oh no, it's not bullish. What do I do now? You know, that kind of thing.
Yeah.
So.
You know, I know it doesn't necessarily, it may seem like that's the case, you know, outside of the last 2 weeks. The bull market's been relatively strong for 2.5, almost 3 years, most recently. And we can get a little tired of the trend sometimes. We can get a little complacent, and this is why I try to speak against those ideas. Complacency is the enemy of the trader. We try to be better than that. But this is precisely why, you know, shows like this one, I hope, are helpful for all of you as we continue to talk about what might be out there, what traders might be thinking about, what traders might be looking to do to incorporate new concepts, new strategies into their own processes. Ray, we're looking at about maybe 10 minutes left here. Let's hit up some stocks in the news. We did have a few that got some upgrades and or downgrades. So let's start with a couple of upgrades that we want to hit on. A couple in the kind of the discretionary space. So I have one on Gap. Gap was upgraded at Barclays to overweight from equal weight. They put a target up on this at $30 a share. That's up from 19. And the Barclays Group states that the company's, quote, disciplined leadership strategy, end quote, under their new CEO, Richard Dickson, they like it. Gap is focused on long-term sales and margin recovery across all of its brands through product innovation and customer targeting, as well as marketing excellence. Always nice to get an upgrade, Ray, but there's also a bit of a short-term development in here in the trend that looks a little bit better than maybe what we've seen. It's been pretty choppy as well, but of late, it did make a new short-term high, highest it has seen since May.
Although it is slight, it is a higher high from the pressed high. Also, it is bouncing off the. I have a 10-day as well. You have 20th.
I can get you that. There you go.
Yeah, no, you're fine. Keep it there. Yeah, but you're that 10-day moving average acting as a good level of support as well. Matter of fact, for those been in the technical analysis class, that looks like a little flag pattern has formed right there.
Sure.
Yep. And so you got it. Potential. Technical indicators showing you some bullish activity. I like that $30 target that they've put on right there at the way back May timeframe level of potential resistance when it does hit it. But you got that it's been there before, as they say, which gives it a good little sign potential that maybe they know what they're talking about.
Yeah. That's a potential scenario. It's always intriguing when a price target call out from an analyst firm lines up with a prior high or resistance or something like that. I'll, as I always do, remind you that no target is a guarantee to be achieved, whether that's an analyst target or a measured move calculation. So keep that in mind. And of course, we see they've got earnings coming up as well on the 20th. So want to monitor that. They're going to be out after market hours on that day. All right, next up for us, we had an upgrade in Yum Brands as well. Pull that chart up here. So Yum has been in a bit of a consolidation also. I'll zoom in just to what you can see these levels, Ray. I've had a few levels of note in here. it's really just been trading 138 to 154 for the majority of it, but there are a few areas of note in there. They were upgraded at Truist, or pardon me, excuse me, TD Cowen, I'm sorry, upgraded to buy. They had been at hold, and they raised their target to 173 from 162. 173, right? That's a $20 pop from here. If it is to be achieved, that'd be a nice premium, but obviously no guarantee, of course.
Yeah, that's pretty aggressive, you might say too.
Mhm.
But yeah, it's been in a sideways trend for a while. Kind of looks back like the chart you showed earlier.
Oh yeah,
but yeah,
yeah, just sideways, right?
just. But yeah, something to be aware of. That it, it's been pretty locked in at that 155 level, having a rough time getting above it. So yeah,
The other thing that I'm reading here is that the TD Cowen likes the Pizza Hut amplifying their growth profile, and they actually like Taco Bell's same store comp sales on a year-over-year basis. So they think they're going to be above consensus in 2026 and beyond. So TD seems to like that. Wanted to make sure we called that one out for you in that space. And then let's do one downgrade in here, everybody. It's on Dell. Now, Dell has already been in the midst of a pretty good pullback. I mean, we're looking at a 40-point drawdown already, if I'm not mistaken. It's having a rough day today here. 40. Oh, excuse me. That's just 20%. Yeah, 26% off over 2 weeks, right? Oh my goodness, that is rough. So they were downgraded at Morgan Stanley to underweight from overweight. New target is at 110. That's down from 144. Boy, Ray, that's rough. I always hate to see an adjustment like this after a 25% drop.
Yeah, and that downgrade target is below the 200-day moving average as well.
Yes, it is.
So that's, some people say you break the 200, that's one of the worst things that can happen to you, that's speak out there. But yeah, it's not looking like it's going the right direction if you're bullish.
Yeah, unfortunately, it's not. So that's an important level. Now, the 200-day there at 119 does stand out, right? Like you said, why does the 200-day stand out? Well, it's an area where traders in a longer-term window start to think about the trend potentially changing. That's about 200 days. It's about 10 months in length, right? There's about 20 to 21 trading days every month. So 10 months times 20 gives you 200. That's just a longer term view of the trend, which is why traders tend under the 200 to become less comfortable with their positions, as long as they hold the 200-day, more comfortable with their positions. And you can see we fought it out here on Dell back at the 200-day for about 3 to 4 weeks in here when we were using it as resistance. So there's as much opportunity for that to act as short-run support now as anything else. So that's very important to eyeball that 200-day there. So we'll remind you of that. Okay, Ray, let's go ahead and hit one more that received a downgrade, also in a similar space, and that's HPQ. Now, HPQ, Hewlett-Packard, HPQ, and Hewlett-Packard Enterprise, HPE, both also downgraded by Morgan Stanley. Now, HPQ downgraded to underweight from equal weight, target at 24. That's down from 26. And then HPE, Hewlett-Packard Enterprise, that one reflecting down, a new adjustment to equal weight from overweight with a target at 25, down from 28. Again, getting these adjustments along the way is one thing, Ray. It's not as much fun when they're already down from the peaks, right?
Yeah. It's already hit those targets. Actually, they talked about, and it's well below, well, actually HPQ, you're on HPE now, aren't you?
Yeah, I flipped over to
actually,
E.
Yeah. HPQ is actually below the 200-day moving average. It's below. And matter of fact, if you look at all your moving averages on HPQ, they're all trending down.
Yes.
And so, yeah.
Yeah, see, that's not what you're looking for as I kick my line a little forward here. when you start seeing, when you're below all of your major moving averages, that's giving traders on the long side a lot less comfort, of course. That 20-day could easily act as continued resistance in the short run. I mean, this is the lowest HPQ has been since this extended bottom here.
Yeah.
Now, I guess that if you're a trader hanging on here, you might be considered to be grasping at straws at this point, Ray. This is a pretty, it's a difficult spot. Could it be a spot for a bounce? Sure. But it's also a spot where things could get decidedly uncomfortable. So, as always, we like to say, Ray, set some levels, know where you want to take action. That kind of stuff is very, very important. Hey, I did see a question real quickly in the chat about applying percentages. I just wanted to let you know, Rita, when I draw a line, anytime I draw a line vertically or what have you, the line I can get the percentage move from that line. But you can also build out, for example, a breakdown that allows you to incorporate in your studies the return data. So just look for that. Now, I think that should be as one of your studies available automatically. So if you do something like this, everybody, you might find return data there. And I think that would be, I'm going to go ahead and I'll share that with you all just to be safe. But I'm going to wrap it there. Hey, Ray, this has been fun, man. I don't get you on too frequently, but I loved having you here. Thanks for doing it. Thanks for sharing your thoughts and your insights. And of course, thanks for being there for our guys, our clients that love coming out to your live events, man. They absolutely love
having you them there. I love being here with you, man, and looking forward to the next one.
Me too. And thanks to all of you for being here, everybody. Big thanks to Ben Watson in the chat. Don't forget to follow us on X. Make sure you're subscribed to the channel here, everybody. Have a great Monday. We look forward to catching up with you all again real soon.